The earnings season is going on in full swing. Couple of good numbers, very good numbers have come in today, and the name which tops that list is Bharat Forge. Not only very good set of numbers, but the commentary for second quarter in a row has been very encouraging. And we have Mr. Kalyani, Mr. Baba Kalyani, chairman of the group, joining us on the show to talk about a host of issues. Mr. Kalyani, thank you very much for your time. The stock is trading at the sessions high right now after a good commentary from you. Not only numbers. Talk to us, sir, a little bit about where the confidence is coming from. What are the signs you are reading that you put out this commentary today, our outlook for fourth quarter and other segments? If you could draw a bigger picture before we get to specific parts of the performance this quarter.
Well, overall, in all our market segments, both in domestic as well as in the international markets, all the segments have done well. Of course, the commercial vehicle business is doing well both in India and abroad in the US and in Europe. The industrial business is doing extremely well on the back of oil and gas and construction equipment increases. Our foray in passenger car business, which we talked last year, is beginning to show a lot of traction, as you can see, and that's increasing at a rapid pace, and we expect that to increase further. Overall, I think it's the whole economy globally that's doing well. In India, we're beginning to see the commercial vehicle industry and the passenger car industry both showing growth rates. And if you see our numbers, we have outperformed the markets, and therefore we gained market shares in many of these areas. We have had a large new order win, more than $100 million, which is outside the commercial vehicle space. So that tells you how we are diversifying our customer base on a global basis.
Afternoon, Mr. Kalyani. What a spectacular set of numbers. And now the NA Class A truck order inflow, that also has shown a significant growth since the start of 2017. Can you tell us how much you benefited from the uptick, and do you believe that this kind of a run rate will be sustainable?
I think, as far as commercial vehicles is concerned, we are pretty much involved on a global basis, whether it's India, whether it's Europe, or whether it's North America. And, we see at least 2018, 2019, these run rates will pretty much be there. We are seeing increased manufacturing activity in the US, so we expect to see even better numbers in 2018. The Indian markets, with all the infrastructure drive, is beginning to show much larger commercial vehicle sales. So overall, in this segment, things look pretty good.
Let's talk about the other two very important segments historically, which saw some pain points, but last couple of quarters are emerging out. One is hydrocarbons and the other is mining. We are looking at metal and mining globally in a rebound. Is that also, reflecting well in your own businesses, and what's the outlook in these two areas in particular?
Outlook is very strong in these areas. We are seeing a huge rebound in the mining sector, especially from equipment manufacturers to whom we supply, and we are almost struggling to meet demand. So it's a good problem to have and a good problem to solve.
Wow, wonderful, Mr. Kalyani. It is so refreshing to hear a large corporate like yours, talk in this language. I don't remember the last time I heard any corporate saying that the demand is so high that we are barely, struggling to fulfill that. Sir, also talk to us about how you wonderfully maintained your margins around the 30% mark for second or third quarter running now, and do you see scope for further improving it? Because you are sounding so positive about all your segments of the business and of course geographies, because I remember some 20 quarters back when 12% odd margins went to 20% odd margins, your stock from 200 odd had run to almost 1000. So in 15 months, your stock had gone up 5x. And now that you are stabilizing your margins at 30%, do you see further scope there?
I think that's a good number to aim for. We have always said that we operate in the band of about 28 to 30%. But you have to understand that we are able to maintain our margins in spite of the rupee revaluation that has taken place. So our export realization in rupees is much less than what it otherwise would have been at 68. There has been increases in oil prices, energy prices that have taken place, and of course increase in commodity prices that have taken place. And we are able to do that because we have a continuous process of improving productivity. We are very in with digital manufacturing right now. We are implementing Industry 4.0 and digital manufacturing in our shops, and I think these are levers that help you reduce your cost, improve your productivity, and keep things under control.
Mr. Kalyani, definitely some very positive commentary coming from you, and I can surely let you know that the stock price as well seems to be reacting, at least for now, to that optimism that you're reflecting. 753 on the stock. But let's talk business and some of the other new age businesses, if you will. What's the outlook when it comes to aerospace, railways, defense, oil and gas? What kind of incremental growth do you see in the future from these businesses?
Well, oil and gas is looking good. I think we are now trying to increase our depth in the oil and gas business. So you will see as the next couple of quarters, we will try to increase our application of knowledge in the oil and gas business to other sectors of oil and gas, both downstream and upstream. So that's a big opportunity for us that we are looking at. As far as railways are concerned, on an overall basis, we would have liked to do a lot better, but the Indian Railways have made a decision to go full electric on their locomotives. So our focus now is largely on the global diesel loco markets, and we're beginning to get traction there. On the defense side, I think by next year, we should see a lot of traction coming in. We have a lot of products that are undergoing tests and validation by the services, and they're all doing pretty well. So we see some good positive traction coming in by next year.
On your right, Mr. Kalyani, just one quick last question on the defense business in particular. If you could talk to us about how was your meeting with Mr. Benjamin Netanyahu when he was here, and do you see more visibility on some concrete orders coming in, large concrete orders in the way of defense for Indian companies, and would you be participating in that as well?
Well, I think irrespective of the Honorable Israeli Prime Minister, I'm more focusing on what our Defense Minister is doing, and I believe we will see a lot of traction coming to the Indian industry from our government itself. And I think this whole Make in India business in defense is going to move forward, and that's my personal feeling, move forward in a reasonable way in the next few months.
We wish you all the very best. Thank you for giving us an in-depth analysis of how things are shaping up, and I'm sure a lot of your investors and shareholders will be heartened to know that things are looking nothing but positive. Demand is strong, margins will continue to be maintained, looking at positive traction in the defense business, and clearly the stock price seems to be reflecting that. Thank you, Mr. Kalyani.